we're going to take the newest industry that is starting to take advantage of the export disc. And we're going to look at it in a good bit of detail because it is really one of the waves of the future. It is the export of American brain power. We have our crops that we export all over the world. We'll have our different sources of energy, presumably, that may even be exported all over the world. We have our strong manufacturing that can be exported. There's another part to the disc. That's American brain power in the form of computer software. And what I'd like to do is review how the development has gone and how computer software programs today can now take advantage of the export disc, obtaining the same benefits as the manufacturer who is manufacturing an automobile here and sending it out of the United States and treating it as a sale of export property. The computer program has now arrived at the same standard. And I want to review how valuable that can be, how valuable the simple establishment of an export disc that reduces your individual income from 50% taxation if you're making business profits in a city with an income tax and a state with an income tax, and you're in the highest federal tax bracket, will reduce your profits from 50% on your export profits from computer software to 15%. Okay, let's look at how this is developed. Basically, the I.R.S., as far as I can find, first ruled on this issue in the year 1986. And at that point, they described export property in a way where basically it was going to be on magnetic tape that would have to be shipped. And it's developed a long way since then. But what the Internal Revenue Service recognized in the very beginning, the basic principle of what is the DISC, which the full name of the DISC is the Domestic International Sales Corporation. What's the purpose of the DISC? The purpose of the DISC is to put Americans to work. That's why we get the export subsidies. That's why, as we learned in the first part of that it's got to be more than 50% U.S. Added value in it. But that means you have to make a separation between two types of intangible properties. One type of intangible property is a royalty. The person who has a copyright, a patent, a franchise, a trademark, that person is going to employ people in the United States. However, when that McDonald's franchise is given to somebody in Japan, that's going to employ a few people here in McDonald's, but that's going to mostly be employing people in Japan. And there's got to be a distinguishing difference between a copyright, a patent, certain kinds of know-how that are not, when transferred overseas, completely going to create jobs over in the United States, but they'll create jobs outside of the United States by using those royalties, by using those patents outside of the United States. Those don't fit in a DISC. A DISC has got to have export property, and that doesn't fit. However, a big distinguishment has been made since 1986, first by the Internal Revenue Service on its own, second by regulations passed by Congress, third by Microsoft having a gigantic case in the courts that further expanded the definition of export property when it applies to computer software. So that now there's relatively stable law on how someone who has a computer software program, not a copyrighted item that they're getting a royalty on, but rather where the program is made in the United States, serviced in the United States, and then broadcast to the rest of the world for its use. That fits into the definition of export property. As far as 1986, the Internal Revenue Service recognized an author who writes a book and gets a royalty is in one category. A person who then produces that book, sends that book overseas for reading to somebody outside of the United States, that person has been able to deal with a copyright article instead of a copyright. They're able to do only a limited type of use of the article. And the distinguishing feature between the author of the book and the tangible book that then gets shipped outside of the United States for sale outside of the United States, but produced in the United States, bound in the United States, printed in the United States, that's export property. The royalty paid to the author is not export property. And that really is the start of the thinking, of distinguishing between what can be used in the software world to apply to the DISC and to get this major tax benefit. What are the rules of the game? Well, first, we want to know for sure that the export property, the software program, the copyrighted article that will then be used all over. We want to know that more than 50% of it was produced in the United States. That is typically not a big hurdle to get over because the Brainpower is here, the programming is done here, and the broadcasting is typically done from here. So the first hurdle that one needs to satisfy, though, is that it's produced with more than 50% United States. The second hurdle, which is not as much legal as it is factual, is for the person selling or licensing their computer software program to someone outside of the United States to be able to prove that it is actually going outside of the United States for consumption outside of the United States, because that's the second one of the rules that apply to make sure that we have DISC property, that it's export property more than 50% U.S., and that it's then going to be consumed and delivered out or consumed outside the United States. With those two hurdles, the law has really developed nicely. What happened was the rulings by the Internal Revenue Service in 1986 that first established the principles of the difference between a copyright and a copyrighted article eventually got turned into regulations, which means the internal revenue laws that are passed by Congress then are expanded to give a much broader explanation of where things fit and make it easier to give guidance for people who are trying to, mainly the professionals, who are trying to establish the companies that you need, the accounting that you need, and the work that needs to make it all happen. In 1998, there was a complete set of regulations that really established a very strong body of law. It was very helpful. What those regulations did was to spell out the four, there's actually six, but the focus here has always been on the four I'm going to mention. And towards the end, I'll mention the two others. But there's basically four different types of transactions that can be done with a copyright article and a copyright. That is, every copyright can be sold. Every copyright can be licensed for royalties. In addition, every copyright article that someone produces pursuant to a copyright can be either sold or licensed also. Therefore, what the regulations did was they said, let's look at let's define what is a copyright right, because we know that's not export property. And they defined it. A copyright right is when someone transfers a copyright and the person who's acquiring that copyright has the right to make copies of the computer program for purposes of distribution to the public by sale or other transfer of ownership, or by rental, lease, or lending. In other words, the sale of the master of the computer, of the software master, or the lease of the person may have the right to prepare derivative computer programs based on the copyrighted computer program, the right to make a public performance of the computer program, or the right to publicly display the computer program. When any of those four rights are transferred, whether it's by sale or by a lease, you have a sale or a lease of a copyright right. A copyright right is not export property. Okay, we know what's not export property. Copyright rights. They get royalties as a license, or can be sold completely. Let's look at our analogy again. The author and the person who produces the book. Now we're going to look at the computer master. The computer master that's going to be used in order to have the people all over the world tap in to the master program and be able to obtain the products that they obtain by virtue of the genius of the computer program. Therefore, in essence, what we're talking about is each computer program being a book electronically sent across the world to be read and used in another part of the world. The same as 1986, with a bit of a twist. Now, once we have that computer program, which is a copyright article, not a copyright, then we have export property. Why? Because that computer program is going to be serviced here. It's invented here with U.S. Brainpower. It's by wages paid to people who are programming in the United States and putting it together, and then serviced here. So we now have pretty much gotten over the hurdle of understanding why we have export property here. We have a few more steps to go to see exactly how the computer program must be dealt with by the export disk so that the full export disk benefits will be there. We now know we're dealing with a copyright article, which when someone in Germany opens up that computer program and uses it and pays for it, and those funds go to the United States. There's two ways that that copyright article can be transferred under the regulations. There could be a sale of the copyright article, or there can be a license of the copyright article. The basic tax difference, there is not much difference, but the formalities are very important. You want to make sure that your computer program is fit into the right category. And how do we distinguish between the two? I'm going to get a little legal and try to keep it a little simple. All right. In one situation, we have the transfer of all the right, title, and interest to that particular computer program that the consumer in Germany now has. In other words, all of the benefits and burdens of obsolescence of that program. The full right, title, and interest to that program. If it's not working and it's past its prime at a certain point in time, that person's just going to throw it away. If they can keep it for 50 years and use it, they're going to keep it for 50 years and use it, and they've paid their price for it. So we have the sale of a copyright article. Maybe it's as simple as a lending library and a sale of a book. However, with the sale of a copyright article, we are treating it as a disk sale of an export property. And the funds are treated accordingly. Let's go to the leasing of a copyright article as opposed to a sale of a copyright article. Best example of that is a computer program that someone can access and pay a monthly fee. And if they don't pay their monthly fee in a particular month, they haven't accessed it anymore, and they have no right to. That's a lease of a copyright article, a computer program that's been leased. Again, the bottom line is the same tax consequences. However, there are distinguishing features that can make a difference in the disk treatment. Let's take a few examples right out of the regulations so I can make pretty clear in a simple way the difference between the copyright article and the sale of a copyright article, the lease of a copyright article, the sale of a copyright, and the lease of a copyright. Example 1, the sale of a copyright article. A United States corporation owns the copyright in a computer program. The U.S. corporation makes the program available for a fee on a World Wide Web homepage on the Internet. A resident of a foreign country, in return for payment made to the United States company, downloads the program into his hard drive of his computer. As part of the electric communications, P signifies his assent to a license agreement. Now, the reason we use the word license agreement is to show you that the one thing that these regulations don't look at is what are the labels. If something's been sold, no matter what we label it, license agreement or not, it's going to be treated as a sale. If it's a lease, it will be treated as a lease. So even though there's a licensing agreement here, what happened here was a transfer of the computer program onto the consumer's computer. That was all right and title to that computer program. That was the sale of a copyrighted article. Let's look at the second example. That same U.S. corporation that owns the computer program then decides that they're only going to allow the people in the foreign country to use the program for 1 week at a time. If they want to use the program anymore, they have to enter into a new agreement or a continuing agreement for an additional charge. Here we've got not the sale of a copyright article, we have the lease of a copyright article. Let's take another example. A U.S. corporation transfers a program to a foreign company in a foreign company in a foreign country, and grants that company, a German company in Germany, the exclusive license for the remaining term of the copyright to copy and distribute an unlimited number of those programs in a specific geographic area. The German company can make public performances of the program and publicly display it. You have, at that point, a transfer of all the substantial rights in that copyright to the German company. A sale of a copyright, not a sale of a copyright article. That copyright is going to be used by the German company to produce copyright articles outside of the United States. Let's take example number 4, where the copyright where the U.S. corporation transfers the program to the foreign country and the foreign corporation in the foreign country, and grants the non-exclusive right to produce and to distribute for sale to the public an unlimited number of discs at its factory in that foreign country in return for a payment based on the amount of discs produced. The term of the agreement is for only 2 years, and that's much less than the remaining right of the copyright. This is a lease of copyright rights. Okay, now the last thing we need to look at is, we know we have copyright article. We know we have export property because we know it's produced in the United States. Now we have to make sure that it is consumed outside of the United States and it meets the rules of passing outside of the United States. we go back to the regulations that were produced in 1998, which provide excellent guidance. And what do those regulations do? The final thing that the computer program seller or licensor, not the final thing, but one of the major things that need to be put in place, is to make sure that these title to these goods are passing outside the United States wherever possible, and to make sure that they really are, as a factual matter, passing outside of the United States. You are going to need foreign IP addresses. You're going to be able to have to prove when you send your software program out that it is going to someone's address that we know is not in the United States. There's going to be, wherever possible, you're going to want some type of a registration or something where the consumer, you know who they are, where they are, if that's possible, even for your own records, for your follow-ups, whatever. But we want to make sure that we're showing that this is consumed outside the United States. Now, in addition to taking all the practical steps that show the evidence for all of this, there are some things that you can do as a pure legal matter. And that's because of, again, these regulations. What the regulations have done is to give you guidance on copyright articles and copyright rights, and then said, now go to the regulations that govern whether income is coming from outside of the United States or inside the United States, and simply use those things that have been around for 70 or 80 years for your guidance, which makes this relatively easy dealing with an intangible asset. So, for example, computer programs, wherever possible, should have a type of a legend on their sales where they're saying, title to this computer program is passing to you when you open this program up in Germany and start to use it. A similar kind of legend for a license, so that at least as a pure legal matter, one has taken the steps to be able to say, I've been able to prove that these are foreign addresses, and I've also legally made sure that title passed outside of the United States. Those are the major highlights of computer software programming, how well it's been adapted to the disk, how powerful a tool it is for the computer software programmer who's making money from all over the world. So now we're at the end of an almost hour discussing the disk in general and a bit of detail on it, and discussing computer software programming and how it fits in and can be used so effectively to save significant taxes by using the disk. Keep in mind, the disk is not just for computer software programming. The disk is for the wholesaler, the retailer, the manufacturer, the extractor of food goods, the extractor of coal from the coal mines that is sending our product made in the United States outside of the United States. That's who the disk is for. So let's review just really what the disk is going to do. The disk is going to, in a very simplified manner, if you have the right professional team that does this on a regular basis and doesn't have to reinvent the wheel, effectively and at very reasonable cost, be able to provide a disk format for you and guidance so that a disk can be established, your accountant can know how to deal with it, and you are going to be able to take export profits from anywhere from 50% of your export profits that are shipped outside of the United States to, even under certain circumstances, up to 100% of your export profits. Pay those export profits to a disk, not pay any U.S. tax on those export profits, not pay a federal 35% tax on it, not pay a 10% state tax on it, not pay a 5% city tax on it, and instead pay a 15% personal dividend tax on all of that export income that you've been able to legally transmit over to the disk for what in effect has been a cleansing process, all right? A cleansing process that cleaned out more than 2/3 of the total taxes that would have been paid without their use.